We just got the April PCE inflation numbers. The PCE numbers are the Fed's preferred inflation gauge, and they came out as expected across the board, coming in at 2.7% year over year for the headline, 2.8% year over year for core PCE, which is minus volatile food and energy, and then month over month came in at 0.3%. And then for core PCE month over month came in at 0.2%. So the fact that these numbers came in as expected is a good thing. However, the one thing I really noticed is that real personal spending and real personal income actually declined by 0.1%. So this brings back the possibility, excuse me, that the Federal Reserve might have to cut interest rates this year and perhaps earlier than expected, maybe in the fall instead of the winter. So this is some good news there, but the markets started strong based on this report, which I thought was appropriate. However, the market started to decline now. And first of all, Dell had poor earnings last night, and the market didn't react well to it. Well, I wouldn't say it was poor earnings, but their AI server sales failed to impress, and their margins on their AI servers weren't that great. So because of that, Dell stock is down about 21% today. Yesterday, Salesforce was down about 20% over fears that AI could hurt software and cloud companies. So Salesforce was down, and a lot of software companies as a whole were down with the exception of Palantir. Palantir might be the diamond in the rough. And Dan Ives calls Palantir and Alex Karp the Messi, Lionel Messi of AI, because their artificial intelligence is used for defense, and they were just awarded a $480 million contract by the Army for 5 years with $153 million up front for their Maven defense technology, and additional money, I think $33 million from the U.S. Digital Artificial Intelligence Office for their AI defense technology. So I think Palantir is a diamond in the rough. I think it's a great company, and they were one of the only software companies that actually did well this week, up about 4.7%, despite software being hurt a lot from Salesforce's earnings report yesterday. So right now we might actually see a little bit of a consolidation or pullback in tech companies, especially software companies right now, because they did run up a little bit too far too fast. But I still say don't count software out as a whole. I still think these software companies are the second, third, and fourth derivative beneficiaries and opportunities from this AI revolution trend that we're seeing. It's the fourth industrial revolution. And I still think they'll do well. Obviously, time will tell. But going back to this April PCE inflation report, I think it was good in the sense it came in as expected. And the fact that real personal spending and real personal income came in actually of a decline of 0.1% month over month is something that the Federal Reserve will want to see, and hopefully will bring back rate cuts earlier into this year, into the fall instead of the winter, in my opinion.